Let's take a minute to talk about our least favorite type of financial aid, and that is self-help financial aid, which is another way of saying loans and/or work study. Now, everybody that completes a FAFSA is entitled to borrow up to $27,000 over the course of a 4-year undergraduate career. So that equals $5,500 freshman year, $6,500 sophomore year, and $7,500 each junior and senior year. Now, these are going to be offered on your financial aid award letter. So this is after you've been accepted to a college, you get your award or essentially financial offer. And our worst case scenario is that we're just eligible for this $5,500 federal government student loan freshman year. Now, there's a very important distinction that we need to be aware of. In many cases, a percentage of that loan, up to $3,500 freshman year, is going to be identified as subsidized. And the other $2,000 in this hypothetical is going to be unsubsidized. And there's a major difference here. And the difference is that the subsidized portion of that loan does not accrue interest for the 4 years of college, and then we get a 6-month grace period afterwards. So essentially, the federal government's going to be picking up the tab on the interest for 4.5 years, making it the most desirable part of that loan. And the other $2,000 will be identified as unsubsidized, meaning that the meter is running on the interest right away as soon as that money's dispersed. And again, there could be a variation here. And it's all tied to your expected family contribution according to the FAFSA. So some families will be eligible for the full $3,500 in subsidized loans freshman year, which can go up to $4,500 sophomore year, which caps out at $5,500 junior and senior year, where some families, the full amount may be unsubsidized for all 4 years of college. And again, it's tied to both the EFC and the particular college that's in question here. So it's not ideal, but that is what will be included on financial aid packages at just about every school in the country. And the other thing here is work study. Work study is a job that the student may get on campus, but is not guaranteed. And it can be confusing because on these financial aid award letters, it looks like we're being offered this work study job of $4,000, and we're going to get a $2,000 reduction in our bill each semester. But that's not the case. It just means that we may have an opportunity to have a job on campus under this work study umbrella and earn up to $2,000 each semester, or whatever the school identifies it as. But it does not come off the bill initially. So this is something where we would pay the $4,000 up front, and the student has a chance to work that off or receive a weekly paycheck to get some spending money while they're on campus. So it's just part of the game here, but let's make sure that we understand that the direct subsidized and unsubsidized loans and work studies is not free money off the top. Okay, this is money that we're either borrowing or income that we have the potential of earning once the student is on campus. It's our least favorite part of financial aid, but I guess it's financial aid.